You're in the Business Insurance Zone with me, Steve Savant, national financial columnist and money color commentator. This week on The Biz, Long-Term Care series, and on today's show, the basics of long-term care with our special guest, nationally recognized long-term care expert, Stephen Foreman, all here on The Biz.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, national columnist on long-term care, Stephen Foreman. Steve, I'm looking at this. It says the odds are that you'll need long-term care. It says 70% of Americans. Now, I'm thinking about the graying of America.
Sure.
I mean, the world is just getting older, but America is really, half the population is going to be 50 and over here in a couple of years.
Right. You know, a lot of people have heard the statistic that I think 10,000 baby boomers are turning 65 every day. So it's also called an age wave or the silver tsunami. And it's, you know, in large part, you think it's just something we have to sit back and wait for our phones to ring. But, you know, the caveat is our phones are not ringing. So why is that not occurring? And there's an answer for that, actually. Part of that is because statistics don't sell. So I'm going to explain why that is. It's because when we, and not to counteract this, but when we go out to our clients and we suggest, well, 1 out of 2 people over 65 is going to need care, people have a tendency to react and say, well, I'll be the 1 out of 2 who doesn't need care. Or we say, 65% of claims are now initiated by women and 70% of claim dollars are by women. People then have a tendency to say, well, I'll be the 30% who doesn't need it. So one of the big transitions we can make now is to move from risk-based selling using statistics and facts, and it's okay, we can go into statistics because they're useful for designing plans, but is to move into consequences-based selling. And that says, even if we allow that this could never happen to you, and I might say, Steve, this is probably never going to happen to you, but what if it did? So we can say, it'll never happen. But if it did, have you considered the consequences it would have on your family and your children to have to take care of you, to have to drop everything if an unexpected care event were to occur to you and have unforeseen consequences on their emotional and physical and financial and your ability to maintain your commitments, your financial commitments in retirement. So we switch to a consequences base.
Well, I'm looking at the consequences now, and I mean, these numbers are staggering to me.
Sure they are.
I'm looking at health care aid, just in a long-term care service. I'm not talking about the Ritz here. I'm talking about average.
Sure.
So I'm looking at 20.20 hours, about $20 an hour.
Right.
Assisted unit is about $3,300 plus per month.
Sounds about
a
right.
nursing home's about $195, and a private room could be up to $7,000 a year. I mean, that's serious money.
Yeah.
And this last one here, nursing home with a private room, that number looks like 78 grand. I mean, those numbers are just impossible for me to get my head around.
Yes, and those are right in line with what we're seeing, about 80 to 100 grand a year for nursing home, and maybe half that for assisted living or around-the-clock home care. But I'm glad you brought that up, because one thing we see too often when producers are designing plans, they'll bring up their cost of care maps, and I've got the latest one here from one of the gold standard, and they'll be coming out with their 2013 numbers in about a month. People too often tend to go right to the nursing home numbers and they say, here's the cost of care, and then they design a plan based upon the cost of care in a nursing home. They say it's $80,000 a year, and then they design this Cadillac plan. Here's the reality. 2/3 to 3/4 of claims are initiated in the home, and they never transition out of there. And also people tend to go to assisted living. Now that's where people want to go. And now we just established that that home care and assisted living claims are maybe half of that, about 40 grand a year. So if we know that most people want to receive care in their homes, and claims bear out that they do receive care in their homes, why are we continually as an industry shooting ourselves in the foot by quoting plans based upon care in a nursing home that's twice as much consequently devising plans that cost an exorbitant amount, and then feeding into the negative stereotype that consumers have that long-term care insurance is too expensive. Instead, we should be devising plans that are based upon care where people intend to receive care in their homes and where they do receive care, and devise plans that are actually affordable.
Do you think there's a difference in the way you've looked? You know all the plans.
I do.
I'm looking at, is there a difference between, should I look at reimbursement plans over indemnification? What? There's a lot of questions they always ask. Do I want to sit there at the end of every month and hand a bill in to get reimbursed, or do I want to just have an indemnification plan that once I trigger the event, I just have this coming in?
Right, very good question. You know, there are pros and cons to both. The lion's share of products out there right now do operate under the reimbursement scenario. And while it can be spun to say that it's cumbersome. You receive bills, you turn them in. The reality is that some carriers are significantly better at that than others. Some have been doing that process for 30 years, and still they receive very high claim satisfaction surveys, and people are very happy with it, and they do it like clockwork, and they're paying $3 million per day in claims. So it can work.
When we come back, I want to talk about this because it's really, to me, this is an important issue.
Sure it is.
Reimbursement, indemnification. I want to make sure that when we look at a long-term care and we look at the pros and cons, that everybody understands the economic yin and yang of it, because I think this is going to be the play, and will the carrier pay? We'll be right back.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome back. Of course, we're talking about long-term care with long-term care expert Stephen Foreman. Stephen, we were talking about it before the break, the reimbursement, and sometimes I go, yeah, because I want to get exactly what I shelled out. I want to get it back in my hand.
Yes.
But sometimes people look at cash indemnification. You know, they just say, I don't want to mess with that.
Right.
And there's good and bad for all this, right?
Well, with true indemnity policies where, you know, if you say I was in the facility for that day, then they just pay you the max amount that you bought. Those indemnity type plans have we don't see those too many. Those are kind of legacy products. What we do see today are cash. Pure cash, where it's a disability model. As long as you show the carrier that you were disabled, that you triggered the policy, 2 of 6 ADLs or a cognitive impairment, they pay you the cash up front for the month.
And real fast, Stephen, ADLs, because everybody,
Sure.
we use these acronyms in our industry.
Right, maybe
ADLs.
folks don't know them.
Let's talk real quick. What is an ADL? What is that? What is that
Activities
acronym?
of daily living. Think of these as the kind of things that you do in the morning. You bathe. You get dressed, which means using your zippers, being able to button your buttons. You eat. Can you feed yourself? Bathing activity. Transferring. Can you get from the bed into the bathroom? Toileting. Can you use the facilities? And continence, which is actually, you know, your actual own continence. So these are typically, we think about these as the activities you can perform in the morning just routinely without standby or hands-on assistance. So if you can outperform 2 of 6 ADLs, that is a standard traditional definition that's been around since 1997 from HIPAA.
No, you said a really big question of mine. The issue of definition.
Yes.
Because every carrier seems to have a little bit different take on some of the definitions. They all agree that 2 out of 6, but
Yes.
do they all agree on the definition of what those are?
You know, I have heard people attempt to make what I would say is a mountain out of a molehill when they say, is it standby or hands-on? Does somebody have to hold your arm to help you, or are they just within arm's reach? My take on this, having looked at the issue from all sides, is that basically they are interpreted. By the time you get past all the language, they are interpreted the same way by and large. That carriers are allowed to, that the language is substitutable at the claims level. That's been my understanding. But I want to get back to the cash thing before we leave. So cash says once you've triggered it, they send you the cash. Now, there are plans that still pay 100% cash. What you bought, you get 100%. The advantage is there's no strings attached. I mean, cash talks. So you are basically at your discretion to spend the money any way you wish. One of the advantages is there's a lot of people traveling who don't know where they may retire. They can go anywhere. It's obviously a worldwide international benefit. There are other plans who combine the reimbursement with the cash. So even if you bought a reimbursement benefit, they may say, here's a rider that says, if you don't want the reimbursement this month, we will give you an alternative in cash for that month. Instead of 100%, you could get up to 100% of the reimbursement. How about 40% of your benefit as a cash alternative for the month? So it's something to look for in policies.
When I'm trying to think about this, and we have many seniors watching our show,
Sure.
I'm looking at the kind of idea of how should I position, I'm getting ready for long-term care. I'm going to go in and look at the market. What's a good contract? What's a good carrier?
Right.
How much will it cost me? And that is the myth. I was surprised. Last year, I decided, hey, it's my time.
Sure.
I just entered my early 60s, and I said, hey, and I was surprised. It was nowhere near the price I thought it was going to be.
No, and we look at statistics on price all the time, and there's a huge range of price. Something could cost as little as $1,500 with one carrier, as much as $3,500 with another. You should not just go with the first price you look. It pays to shop around, or it pays to look at an agency that is able to shop from many carriers.
Well, yeah, let's go down that road because really this market has been reduced down to about a half a dozen carriers. Really, I mean,
yeah, I think there are about 20 or so carriers, but by and large, about 80% of sales are made by about the top 5 carriers. It's concentrated, and so if you can find an agency, and I always say spend as much time shopping for your agency as you do shopping for your carrier. Does your agency have experience in this business? Have they handled many claims in this business?
How important is it to have experience in this as an agent?
Well, it is, because an agent can be an advocate for you. An agent knows how to read and interpret the policy language, the specimen policies. They're able to help move your policy through underwriting. They're going to be there for you at claim time 30 years from now. If you work with an agency that's only sold 1 or 2 policies a year, will they even still be in the business 30 years from now when you will be there?
Right.
And so I think people tend to spend too much ability looking at a hyper-abbreviated letter grade when that doesn't really tell you much about the service of the carrier.
When I think about long-term care, it's a very important decision.
Sure.
And we want to look through every single carrier. And if you go out to our site, oneforthemoney.tv, and say, Steve, sign up and I need to see this, we'll show you all the carriers that we think are players.
Great ability.
We'll give you the ability to look at this and the way Steve looks at it, because he's a pro, that's all he does.
Yes.
And so when you go out to our site, don't forget to put in and say long-term care info. And remember, you can watch this show and all our shows by clicking the red on-demand video button right on our show's homepage at thebiz.tv. Well, that's the Buzz on the Biz for today. Get in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.